So good evening, this is Professor Mayer, and in our fifth chat session, we are covering chapters 9 and 10, managing the audit function, as well as audit evidence and work papers. Very interesting topics, and it really sort of frames what it is that we're trying to do in relationship to the internal audit process. And in fact, I think one of the things that you'll find as we're going through this is in many cases it's not that much different as compared to the external audit process, especially when we start talking about specific testing that we are doing. Okay, so in the first couple of pages in chapter 9, and I'm focusing primarily on page 9.3 to 9.6, is what we're looking at is we're looking at the relationship of internal audit within the organization, as well as developing what we call an internal audit charter. Now, the internal audit charter is a formal document. The internal audit charter should be approved by the audit committee and essentially frames the independence, the access to information of the internal audit department. So let's just kind of talk about this. Is one of the dilemmas that internal auditors have is to develop this independence within an organization, even though technically speaking we're not really independent, because the reality is that we work for the same organization, we get paid from the same bank that everybody else does, we eat lunch with people, we have this interaction that clearly on many levels is we are not independent, because again we are part of the same organization. But what we're attempting to do within the internal audit charter as well as our internal audit structure is to develop a level of independence. So generally speaking, the internal audit charter is the document that actually frames this independence. So if you look at page 9.4, when we have the Practice Advisory 1000-1, Internal Audit Charter. What this is a formal written internal audit charter that's critical to managing the internal audit process. The charter provides a recognized statement for review and acceptance by management as a document in the minutes by the board, and facilitates a periodic assessment of the adequacy of the internal audit department. So one of the first things that generally speaking takes place when a new chief audit executive comes on board is that he or she will then assess the internal audit charter and make sure that in fact it is appropriate. Maybe the organization has changed, maybe it's grown, maybe it's gotten smaller. Whatever the case may be, is that we need to understand that the charter defines what we have access to and defines the reporting mechanism within the organization for internal audit. You notice that it's signed off by management as well as the board of directors, so that everybody in charge, those in charge, understand where it is that we as internal auditors fit into the total scheme of the organization. Our independence is based upon the reporting structure. So the independence is coming from the fact that we are getting our direction in terms of what audits to complete, not from management, but from the internal audit or the audit committee. So the audit committee essentially represents the principals within the organization, and the audit committee is our lead in terms of a structural perspective. Now keep in mind, from a functional perspective, the audit committee is not going to order paper for us for our copy machine, or get new printers for us and new pens and pencils and all that kind of stuff. So from a functional perspective, we need to report within the organization, but from a structural perspective is we're reporting to the audit committee. It's the audit committee that approves the audit plan And the audit plan is basically what we're going to be working on for the next year. And our audit results are then presented to the audit committee. So that's how we actually develop our independence. And these are the kinds of things that need to be in the audit charter. Now you notice the next point is access to information. So embedded in the internal audit charter is the fact that we have access to all information of the organization, which is absolutely critical, because what we're attempting to do is we are attempting to, as we are going through a piece of the organization or whatever, is we may need documents. And the last thing in the world that we want to have happen is that those documents become unavailable because management says, no, we're not going to give those to you. Within the internal audit charter, and again, keep in mind that the internal audit charter is the direction that we're getting from the audit committee, which are the principals within the organization. These are the folks that have the authority to say, you know what, it's really our organization as shareholders or as representing the shareholders, and we're going to be able to, and we need this information. So the access to information becomes essentially, especially critical. Now, I want to focus in on impairment issues. So if you go to page 9.6, and it's actually starting on 9.5, independence and objectivity. This is the standard 1120. Internal objectivity. Internal auditors must have an impartial, unbiased attitude. If you go down to items, actually let's go to 2. It says individual objectivity involves the chief audit executive organizing staff assignments to prevent potential and actual conflicts of interest and bias. So as an example, it's very possible, and this happens all the time, that someone from another part of the organization joins our audit team. Okay, so someone from accounts payable comes in, and we are now starting an accounts payable audit. Well, given the fact that they are no longer independent, is the chief audit executive would not assign that person to the audit. And in fact, I think the standards require that there's a cooling off period of some sort. I think it's actually 6 months after the person joins the organization. Number 3 is the review of internal audit work results before the related engagement communication are released and assist in providing reasonable assurance that the work was performed objectively. Number 4, the internal audit's objectivity is not adversely affected when the auditor recommends standards of controls for systems or review procedures before they are implemented. The objectivity is considered to be impaired if the auditor designs, installs, drafts procedures for or operates such systems. So number 4, and again we're talking about our relationship within the organization, is it's perfectly acceptable for us to make recommendations. Absolutely, that's what we do. I worked with one organization in internal audit, and we shied away from the word recommendations. We would use the term options to consider. Options to consider essentially were recommendations, but we sort of toned it down because we wanted to make sure that we stayed totally independent in terms of what management decided to do. But the idea is any recommendations that we make are perfectly acceptable. However, we lose our independence and our objectivity if we are now in the process of creating policy. So we do not want to be creating policy. We do not want to be, as it says here, installing, designing, installing, drafting procedures for or operating such systems. So we're able to recommend, but once we become a part of the process in terms of of actually designing these systems, writing procedures, is that we've essentially stepped in the role of management and we lose our independence. Last piece here in terms of 5, it says the occasional performance of non-audit work by the internal audit with full disclosure in reporting processes would not necessarily impair objectivity. However, it would require careful consideration by management and the internal auditor to avoid adversely affecting objectivity. So basically what we're saying here is, as a general rule, we absolutely should not be a part of management. We should not be writing policies. However, there is, and we'll actually talk about this, is there is a role related to our role as a consultant. Once we step in that consultant role, we have the ability to actually do the implementation. However, if we do the implementation, the auditor that does the implementation should not be the one that then audits the process. So we never want to be in a position where we are auditing our own process. I just want to also focus in on page 9.7 related to proficiency and due professional care. You may recall that these are terms that are used in the external audit world. Proficiency is knowing what to do. Due professional care is essentially this term that we use where we have this professional skepticism and we treat every assignment from a very professional basis. So proficiency and due professional care simply state that engagements must be performed with proficiency and due professional care. Proficiency goes in standard 1210 goes into more detail, stating that internal auditors must possess knowledge, skills, and other competencies to perform their individual responsibilities. So let me just sort of step back here and make the recommendation that, in fact, if you are deciding to get into the internal audit world, and if you do, and if it was something that I said that encouraged you, well, then I'm happy about that, because frankly, internal auditing is a wonderful career. But if you do, clearly your proficiency, some of that is your responsibilities. You need to get the training. Most organizations will supplement your training. Most organizations that I've worked, we had a pretty liberal policy in terms of getting you trained. But at the same time, it's absolutely critical that you document your proficiency by becoming certified. So the key certification is going to be a certified internal auditor. You may want to consider also a certified fraud examiner. Those are probably the two certifications that are the most highly respected. Of course, the CPA. I'm assuming you're going to get your CPA. So I'm looking for the other certifications that you need to consider, but the CIA and the CFE are probably the two that would best serve your purposes in terms of developing this proficiency or documenting this proficiency. Due professional care is in standard 1220 is that the internal auditor must apply the care and skill expected of a reasonable, prudent, and competent internal auditor. So the idea is that we certainly are not infallible, but we also need to understand that when we go into an audit we need to treat this audit with due professional care, with professionalism, and treat it in such a way that we are actually creating value for the organization and maintaining our independence. We go to the next slide here. I want to focus on planning and communication, so I'm actually looking at the next 2 pages here. So as previously mentioned, this Chief Audit Executive is responsible for creating an operating budget and allocating resources designed to accomplish the internal audit plan. So let's talk about the internal audit plan. The internal audit plan is an annual plan, and this usually what I've done is I've developed this plan and then presented it to the audit committee. So the audit committee, assuming would approve this, and based upon this plan, then I have the ability to begin to allocate resources. So we're going to allocate resources, budget time, and so forth in terms of developing these audits. Now, I want to make a point here that I think is going to be very important as you're moving forward with this audit process. Is one of the things that's very important is understanding what type of audits create the most value for the organization. And I've spent a lot of time talking to a number of people smarter than I am, and I agree with the advice, and the advice is the fact that what you should be doing is carving out audits that can be completed in a matter of a couple of weeks. The last thing in the world you want to do is to create an audit that's a 6-month process. Okay, so you don't want to do that. You want to go in, you want to get in, you want to get out, you want to issue your report, and go on. Now, if there is a project that clearly is going to take 6 months, well, what you want to do as a chief audit executive is to carve up this audit into chunks or sections of the audit so that you can cover one piece at a time. So the idea is that if there's this major process, so it's a purchasing cycle for multiple sites within the organization, is we are doing this in several different audits, and then at some point in time we're going to combine these audits and summarize these from a global perspective. But the idea is that we're going in and we're auditing very specific pieces, and we're doing this in a very systematic and efficient manner. So this is all part of the audit plan. But again, the audit plan is based upon the fact that we need to understand that there are limited resources. You don't want to overpromise, and if you underpromise, then this is not going to necessarily create any value. So we need to understand how we actually plan in terms of the audit process. Now, in terms, and actually I'll just make this point here, is, and we actually alluded to this in the other page, is consulting services versus assurance services. So what we generally do is assurance services. So what we provide are assurances related to internal controls as we are assessing those. Consulting services are those services where we stand in the stead of management and develop processes and in fact implement processes, which is fine, but again, if we're doing consulting, we are not doing assurance. We lose our independence for that specific project, which is fine as long as we understand that the person that is doing the consulting cannot be the person that then goes back and audits the process. Okay, so let's talk about the communication, and I want to specifically talk about the interaction with the audit committee. The takeaway that we want to have related to this is that we are reporting to the audit committee. We're reporting to the audit committee our audit results, and we are, generally speaking, when the audit report is presented to the audit committee, both the auditor and management are there. So the auditor is presenting the audit report, and management is presenting their plan of correction. So the audit report and the plan of correction is presented to the audit committee. So what this means is that we are not presenting to the audit committee before we've worked out the details of a plan of correction with management. So we absolutely need to understand that as we are working with management, as we're completing the audit, is that we're communicating with them and identifying specific issues so that by the time the audit is over, we're all basically, not necessarily always, but basically in agreement in terms of what the issues are and how these items need to be corrected. The last thing in the world that you want to do as an internal auditor is go to the audit committee, present your findings, and management says, no, this guy's wrong, he didn't look at this. We tried to tell him. If he would have looked at this, the audit results would be different. Now, it's very possible that that's the case. But part of the audit is to going back to the client and validating the findings that you have, not necessarily that you're negotiating, but validating these findings from a research perspective. We call this member checking, and making sure that what we have observed, that the documents that we have actually support our conclusions. And if they don't, you clearly want to do this before it goes to the audit committee. So the audit committee is the last step of the process. It's a formal process. And again, you don't want to go to the audit committee without having some of these issues resolved. That's not always possible, but we clearly want to make sure that we're doing that in such a way to minimize the stress within the organization. When we talk about resource planning, really just talking about the fact that there's a structure within the audit department. Staff auditors, to senior auditors, to managers, to directors, to chief audit executives. Keep in mind that chief audit executive may be using directors and managers somewhat interchangeably, depending upon the assignment. And generally speaking, you may have 1 or 2 directors, 4 or 5 managers, maybe 10 or 12 auditors and senior auditors. So you have a lot of people, and the work is usually divided where a manager or director is directing a specific audit or managing a specific audit. So he or she is managing a group within the audit group in terms of a specific project. So you as a manager or a director may be working with one group this month, another group another month, which is actually a very good idea in terms of becoming very interchangeable with your auditors, because you're going to learn skills from different people. And if you're a staff or a senior auditor, you clearly want to have that experience of working with a lot of people, because you're going to be able to gain a lot of understanding from these various individuals. So the resource planning, again, is just kind of think about it that it's a top-down approach. Top-down approach is we have our audit plan. Within that audit plan are specific audits. These specific audits require a specific amount of time and a specific set of resources. We are then developing our audit staff, our staffing requirements based upon these requirements. So if there's a high expectation from the audit committee in terms of getting a lot of things done, well then we need to have the right organization. We also need to have maybe some specialized people, maybe a IT auditor, depending upon the organization, maybe someone that knows pensions or knows inventory, or I've worked in healthcare for many years, and I always thought this was wonderful. Never happened all the time, but if you were able to get a clinical person, a nurse or someone that also has the audit experience, it becomes very valuable, because this person understands the industry, understands working with patients, understands why the hospital is there, and yet they're able to use that information from an audit perspective. So I've seen, at least when, again, a nurse is not going to do so much in a manufacturing environment, but a nurse or another type of clinician is an extremely valuable asset in a hospital type audit organization. So just kind of keep that in mind, is you really want to understand the organization and understand how this kind of works together. Okay, so let's talk about governance and risk management. So when we talk about governance and risk management, these are kinds of things that sort of work together. If you're in your books, we are on page 917 and 918 and so forth. Okay, so what is governance? Well, governance is essentially this structure within the organization that provides oversight from an ethical perspective, from the perspective of of creating a control environment. If you remember our discussion related to the COSO model, is governance is a part of that. Risk management is, again, a part of this. And we've talked about enterprise risk management. Enterprise risk management is taking a look at the organization from a risk perspective. So we're looking at the risk from a top-down perspective. Governance, again, is a top-down perspective. Is we want to have the tone at the top. From a risk management perspective, we want to understand what are the risks that are driving the organization. What are the risks related to the key objectives of the organization? Embedded in that are going to be very specific things that then create value as we are developing the risk management approach. Risk management is in some ways actually a little bit more specific than sort of a governance structure. And in fact, many organizations will have a risk management department. In a hospital, we have a risk management department. Well, what is a risk management department there? Well, these are the people that assess any pending litigation coming into the organization. So one of the interesting things related to healthcare and hospitals is that hospitals get sued all the time. Sometimes it's appropriate, sometimes it's not appropriate, but the risk management department is taking a look at this litigation, this pending litigation, and essentially assessing this from a risk perspective. Now, not only are they assessing it from a risk perspective, from a financial statement perspective for the organization, and I'm sure you've had lectures related to the contingent liabilities, which we're not going to talk about here, but clearly there are financial statement issues related to litigation. But the other thing related to litigation that becomes very important is litigation becomes a basis for improvement. So a good risk management department is going to look at what is coming into the organization, good or bad, and using that to develop better skills so that the organization can actually grow from a risk management perspective. Okay, so again, the term risk management is somewhat nebulous, but we want to understand how this actually applies to the organization. Now, I want to just take you to Exhibit 9.5. Exhibit 9.5 is on page 920. And what we're looking at here is internal audit's role in enterprise risk management. So you notice here that we have green is good, yellow is caution, and red is not so good. Okay? So what we're looking at is what is internal audit's role related to risk management. So a couple things on the green side is giving assurances on the risk management process. So we, in fact, should be managing or auditing the risk management process, giving assurances that risk are correctly evaluated. So again, back to what we're attempting to do is we are attempting to help risk management from the perspective of making sure that they are going in the right direction. Keep in mind that internal audit should not be in charge of enterprise risk management. However, we should be a part of it from an assessment and an assurance perspective in terms of what's actually taking place. Okay, so if you look at some of the red items are the items that internal audit should not undertake. So internal audit should not undertake the accountability for risk management. So as we said, is that the auditor is not responsible for risk management, but as we said a few minutes ago, that the auditor does have the ability to give assurances related to risk management. Okay, so some of the other areas where there is some leeway in terms of what we can do, I'm just kind of picking out one or two items here, is championing the establishment of the enterprise risk management process. So again, as an auditor, we can go, we can promote enterprise risk management as a good thing. Developing the strategy for board approval. So probably not the whole thing, but part of what we want to do is we want to be a part of the process as it's being presented to the board. So we do have a role in risk management. Our role is not to run the show, but certainly an assessment, giving assurances, and being sort of the champions of the risk management process is something that we need to understand. We've really talked about risk tolerance, and this actually is part of the whole enterprise risk management perspective, is keep in mind that we will never remove risk. We don't want to remove risk because a company is successful because they are willing to accept and take risks on various ventures. That's how you become successful. If you refuse to accept risk, you're not going to grow. Now, keep in mind that if you are a internet company trying to grow, your risk tolerance is going to be much greater than if you are a not-for-profit organization where growth is not necessarily the primary objective, but sustainability may be the primary objective. So your risk tolerance is going to be a part of the decision process in terms of what we can accept and what we want to do within the organization. And as we're talking about this is really what we're talking about when we are focusing in on the governance and risk management perspective. Okay, let's talk about quality assessments. This is 922. Actually, I want to start jumping into chapter 10 very quickly. If you notice, I tend to get started on a story, and it's hard to shut me up. So I apologize for that. So very, very briefly, the idea is that quality assurance within an internal audit department is a good thing. And it's a good thing from the perspective that it is validating that we are, in fact, a good internal audit department. Now, if you look at Exhibit 9.6, is internal audit function quality procedures as outlined by the IIA. These are internal assessments. Internal assessments is what we're doing internally. If you look at Exhibit 9.7, internal audit function self-assessment quality assurance procedures for small functions as outlined by the IIA. What we have here is we have external assessments. So one of the things that it's actually kind of interesting, our audit shop was audited by an external evaluator. External evaluators come in and they assess the quality of your department and make specific recommendations. So that's a good thing. And again, without going into too much detail, I think you're going to see some very good things related to the internal audit assessment in these procedures. Let's jump to, let's turn off someone's microphone here, which I did. Okay. Okay, so I think that's good. So let's jump to chapter 10, and what we're looking at is we're looking at the work papers. Okay, now work papers are the documentation that we use to support our findings. Keep in mind, and I'm not really going to talk about this, is embedded in the book is they talk about teammate. There's actually a number of work paper programs, electronic work paper programs out there that are pretty good, but it's all basically the same thing. It's really sort of creating a document structure related to evidence. Okay, but let's talk about the evidence. So evidence is, and again, one of the things that I think will be very interesting to you, it's all interesting. Let's face it, this is an interesting topic. But what is interesting specifically related to Chapter 10 in terms of evidence and the work papers for internal audit is the fact that we're really using the same terms and applying them basically the same way as an external auditor. So it's actually somewhat interesting. Okay, evidence is everything, and probably is not stated that way in the book, but as we are going through the organization, going through the audit process, is we need to understand that everything that we see, hear, smell, observe, and document becomes a part of the evidence. And so there's direct evidence, there's indirect evidence. All these things become a part of what we are attempting to understand related to what's taking place. Now, that being said, and we've talked about professional skepticism, so I'm not really going to talk really about that, but I want to focus in on the persuasiveness of audit evidence. So the idea is that we are not necessarily at the level of being convinced, but what we want to do is we want to be persuaded related to the evidence. Persuaded meaning the body of evidence that we have, even if it's imperfect, because we are looking at it using our critical thinking skills, we're actually able to be persuaded that something is working or something is not working. So persuasion is essentially the threshold that we are using. Now, persuasion is based upon 3 elements, and we're on page 10.3 here if you're following along with your book. Relevance is the evidence pertinent to the audit objective. Does it logically support the auditor's conclusion or advice? Reliability, did the evidence come from a credible source? Did the internal auditor directly obtain the evidence? Was it given to you? Or maybe in the best case, although not perfect, is maybe it came from an outside source, so from a third party. Or one of the terms we use in external auditing is the auditor aware of where the information came from and can actually vouch for that actually taking place. Sufficiency is, has the auditor observed enough evidence or obtained enough evidence to be persuaded? Okay, so generally speaking, we're not looking at every transaction or every event that's taking place, but we are looking at enough, again, enough for what? To be convinced. Is it perfect evidence? No, it's imperfect evidence, and the threshold that we're looking for is to be persuaded. So continuing on here, let's look at this. So what are we talking about? Well, we're talking about sort of kinda the same stuff that we use in the process of the external auditing. So what do we do? Well, the first thing we want to do is we want to gain an understanding of the client, what's taking place within the organization, within the department, within the area that we're testing. Based upon this is we then determine what test of controls that we actually want to test. Now, let's talk about this from a sort of a practical perspective. So gaining an understanding is basically what we're doing at the beginning of the audit. And in the beginning of the audit, what we are doing is we are observing, we're making inquiries, we may be doing certain attribute testing, maybe looking at controls, but probably not at this phase. What we're trying to do is understand what's taking place. So understanding what's taking place is we're documenting this, hopefully through a flow chart. We could be documenting this based upon questionnaires or a narrative. Frankly, I prefer a flow chart. So once we have the flow chart, we then assess this from the perspective of what controls we need to be testing. And again, when we're looking at the testing of controls, what we are attempting to do is we are looking for specifically what is, what are the controls and are they actually working? So as an example of this, I always use this as an example for test of controls, is if the control says that any check over $10,000 requires 2 signatures, well, guess what? that is the attribute that you're going to test. You're going to take a sample of checks over $10,000, look for 2 signatures. If they're there, that's great. If they're not there, then that's fine. When we're looking at the next piece here, this basically relates to our substantive procedures where we are measuring monetary misstatement. We're looking at plausible relationships among data. So in this process, what we're attempting to do is we're attempting to take information from 2 sources, 2 or more sources, and understand the relationship, a plausible relationship between the 2 items, and essentially assess this relationship. Sufficiency, again, is sufficiency and appropriateness of the audit evidence is given. We certainly want to consider this, consider the amount of evidence that we're looking at and its appropriateness in terms of what we're trying to do. Now, 10.6 is these are specific procedures that we might be using. Inquiry and observation, clearly this is the core of gaining an understanding, maybe basically what we're doing in terms of testing the internal controls. Inspection of documents, I've basically given an example of this. Vouching and tracing, this really relates to this whole concept of where we're looking for the completeness of an account balance, and we're also looking for the existence of, if it's an asset, of what actually is included in the account balance. Okay, so again, completeness and existence, or completeness, and the word escapes me right now. But we want to make sure that the transaction actually was completed, and we want to make sure that that there actually was a transaction. Okay, reperformance, analytical procedures, and are some of the things that we're going to do from a mathematical perspective. Reperformance, we may be doing this using something like ACL. Confirmation, when you see the term confirmation, you're actually looking at this from the perspective of getting documentation from outside. Very interesting information here related to effective interview strategies. Interviewing is where we're going to gain our best understanding of what's taking place. So what are we going to do? Well, the first thing we want to do is understand what our objectives are. Gather information relevant to the engagement, establish a rapport that fosters a positive working relationship throughout the engagement. Define the purpose, identify the appropriate interviewees, gather a background information about the audit, create the right set of questions, what, why, how, where, and who. One of the things that you clearly would want to do is you would want to write out some of your questions. Make sure these are open-ended, semi-structured interview questions with the idea that the person is not answering yes or no, but is facilitated in a conversation. The last thing in the world you want to do is you don't want to say, well, why are you doing this? Or if you ask, why are you doing this in a specific tone, chances are they're going to say, oh, well, maybe I'm not supposed to do this. No. You may, if you're asking a why question, you're probably going to ask it, help me understand why you're doing this, as opposed to why are you doing this. So you want to watch your language. Arrange the logistics, time, date, length, prepare, and outline. Absolutely critical. And one of the things that you want to do as part of a team is to sit down and talk about what type of questions you're going to ask. Now, the other thing that you want to decide is, are you going to interview a group, which sometimes is effective, or are we going to interview people individually? There's not a right or wrong answer, but as you understand what it is that you are trying to do, this is going to be some of the things that you need to think about. Characteristics common among interviewers: professionalism, interpretive skills, good interpersonal skills, the capability to display confidence and innate curiosity, objectivity that is and remains impartial, and refrain from injecting personal opinions. Okay, so when you're doing the interview, we're not there to have them hear how great of an auditor you are. That's not the job of the interview. The job of the interview is to get this person to open up and to express what's actually taking place. Common barriers are the auditee impedes, such as competing demands on time, preconceived notions about internal auditors, fear, suspicion, and so forth. Flaws in the interview process, lack of requisite competencies on the part of the internal auditor, and in fact, you may in fact be interviewing the wrong person. It's absolutely critical to your success is the ability to use this information to create value within the process. We're going to jump ahead in our final 5 or 6 minutes and talk about work papers. So what are work papers? Well, work papers is our documentation that we use to document the process. So if we're doing testing, we're documenting it through the work papers. If we are writing flowcharts, those flowcharts are documentation of the internal control process. If we're doing test of controls, this is documentation of the control testing. We also need to document how we actually drew the conclusions that we did. We want to document any meetings that we've had. We clearly want to document the interviews that we did with specific people. And in fact, it's given the fact that in many cases you will be re-interviewing these people, not necessarily in this audit, but maybe a year or two later in the next audit, keeping a detailed file of who you talked to, when you talked to them, what their phone number is, what their email address. Pretty important, because this is the kind of stuff that then can be used to help facilitate a review in the next time around when you're doing the audit. So when we look at the purpose here on page 1013 is aids in the planning and performance of the engagement, facilitates the supervision of the engagement and the review of the work, indicates whether the engagement objectives are reached, provides the principal support for the internal auditor's communication to the auditee, serves as a basis for establishing the internal audit functionality, and contributes to professional development. Because as the next audit is proceeding, is using this essentially as a template for the next audit is important. In fact, that's one of the key advantages of using electronic work papers. Types of work papers include time budgets, questionnaires, process maps, charts, graphs, flow charts, any agendas for the internal audit meeting. We clearly want to document as much as possible, and if we're meeting with people, who we're meeting with, if we've established some very specific questions up front, let's document those. Let's document the interview process. All this stuff then becomes a part of the work papers. One of the things that we need to understand is that some of these work papers may or may not be sustained in perpetuity, and that's the next piece is we need to understand is how we actually retain work papers, or what the strategies are related to the work papers. Okay? And I just want to go through a couple of items here on page 1016, and this is the 11 important things to remember about audit evidence and working papers. The quality of the internal audit conclusions and advice depends on their ability to gather and evaluate sufficient appropriate supporting evidence. Professional skepticism means that the auditor takes nothing for granted. To be persuaded, audit evidence must be relevant, reliable, and sufficient. Audit procedures are specific for the tasks performed to gather the evidence required to achieve prescribed audit objectives. We talked about vouching and tracing. Analytical procedures, we've talked about that. Now, we haven't really talked about the generalized audit software such as ACL or IDEA, but this gives us the ability to analyze complete data sets as opposed to a sample, and it actually, embedded in it, creates an audit step, an audit process that we can actually use as part of our documentation. Last point here is electronic work papers such as Teammate, some of these other items, increase the audit efficiency and facilitates consistent organization and retention of audit documentation, which is true. And I will tell you that my take on the working papers, electronic working papers, is they're a good thing, but they take a tremendous amount of commitment on the part of the organization to get the working papers up and running. We started using, actually I've used Teammate, and there's another firm that also has another a set of work papers, and it took months to get this up and running. We didn't necessarily get buy-in from all the auditors, so the implementation process was less than perfect. That may not be the case in every organization, but certainly we did not have perfect success with electronic work papers, but clearly it did provide value in terms of providing a consistency related to what it is that we're trying to do in our auditing. Okay, so I think we've gotten to 9 o'clock. Not exactly 9 o'clock. It is exactly 9 o'clock. At least it is on my new iPhone. So that's good. And we will be continuing our discussion in 2 weeks. I will get the questions out there. I actually may end up writing them myself so that we can work through these, and we will go from there. So in any event, I thank you very much for your time and your participation in this. Internal auditing is a great career option. I'm actually glad that I'm completing this session, because I really believe that this actually this is a great career option. Correct. It's for 9 and 10. I think I said, is it for 9 and, yeah, for 9 and 10. Yes, I think I said in the announcement 10 and 11, but it is for 9 and 10. Yes, yeah. So I apologize for that, but it is for 9 and 10. And it'll be whatever the questions are. I forget if they're 5 or 10 questions, but I'll give you plenty of time to do it. So don't worry about that. Okay. Once you get it done, I'll probably have it set up so that you'll have it all through the weekend to do. And then again, related to the midterm, I have a few frustrations related to that, but that's neither here nor there. But in any event, if there's some adjustments I need to do, I'll certainly do that. So I appreciate everybody's time and attention. Everybody have a wonderful evening, and I think we do this again in 2 weeks. I actually like these 1-hour discussions. They're not so long as the longer sessions, and I think we get a chance to cover a lot more material. So everybody have a great evening, and thank you very much, and we will see you soon. Okay, thanks a lot. Okay, bye-bye.